Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy Place and Experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Placent.
Good morning, Next.io, and welcome to another edition of your weekly news with me, of course, your host, Conor Mulher, and my wonderful one and only co-host, the magical, erudite, handsome, and always good value, Mr. Nico Jansen, CEO at Bet It Best. Nico, how are you, brother?
I'm awesome. Cutting a long story short, sun is out. It's roughly 30 degrees of Celsius here in awesome Munich. Yesterday I was at a beer garden. I will be in a beer garden this evening as well. So I am living the Bavarian lifestyle, and I actually enjoy it very much, right?
Nice.
So, but heading over to you, what's cooking good looking back in the UK? How are you, mate?
I'll tell you, Nico, Bavarian lifestyle sounds nice. Dust off the old lederhosen this evening and get back out to the beer garden. I'll tell you what's cooking here in the UK, Nico. Not only me, because it's also quite warm here in London, but yesterday I made a pea and ham soup, and it was very nice. So that's what I've been cooking, and I think I'll have some for my lunch today because I have some leftovers too. I don't know if you meant literally what's cooking, but there you go. That's what we've got. We're going to do a little bit of a headline roundup this week of some of the biggest stories because, well, there's been a few interesting bits and pieces. We've got a couple of M&A deals. We've got a market exit from BlueBet to come, and we've got a pretty substantial ruling from Georgia. That is the country in the Ural Mountains, not the state in the United States of America. So lots to look at today. It's going to be a bit of a whistle-stop tour around the biggest stories of the week. But speaking of which, Nico, before we get on to our four, count them, main stories for the day. First, of course, it wouldn't be weekly news without the now world-famous and much requested 10 in 5 by the one and only Nico Jansen. Nobody does it quite like you. Why don't you take it away?
Yeah, so first of all, sports betting in Texas, not going to happen. According to a recent report from Eilers and Krejcik Gaming, a Southern Californian-based advisory firm specializing in the gaming industry, Texas has been removed from the list of states likely to legalize sports betting in 2025. Original statement reads as follows. We previously projected that Texas would legalize in November 2025 via ballot measure and the launch in fall of 2026. We've now pushed the timeline back a legislative session with legalization occurring in November 2027 and launch occurring in time for the NFL season opener in 2028. So hold your horses in Texas. It's gonna take a while. Getting some information about the NFLPA suing DraftKings, which is now estimated worth $65 million owed in an NFT deal. The NFL lawsuit claims DraftKings still owes the league roughly $65 million in guaranteed payments. The NFLPA says DraftKings' termination of a 2021 contract is a result of buyer's remorse as the NFT market has dramatically cooled down. DraftKings' inability to profitably commercialize the intellectual property it licensed does not excuse performance, and DraftKings must pay what is due, which is an official statement of the NFL's complaint. So, still staying in the US, as Bally's chairman is confident in Chicago's casino project. The ongoing demolition of the former Chicago Tribune printing plant marks a milestone in the $1.34 billion development, which is expected to open by September 2026. Just to give you a slight, comparable of this 1.3 billion, the Rush Al Khaimah Win development is 3.5 times this 1.3 billion. So this just gives you how much Rush Al Khaimah is worth. So Kim, who is one of the chairmen, remains optimistic about the long-term prospects, stating that the temporary casino's performance does not reflect the potential of the permanent facility. And he states, we haven't seen anything in this market that says we are not as excited as we can be. So I'm pretty sure opening in Chicago will be quite interesting. And now to give you some numbers of the US market, as well as a new YieldSec report shows that the US gambling market reached $40 billion in gross gaming revenue in the first half of 2024. The company said 29.1 billion of that GGR came from illegal platforms between January and June 2024. YieldSec uses predictive analytics in its report, and the report for sports betting and online gambling only reveals 10.8 billion in GGR on legal platforms, so just 1/4 of the overall sum. According to the report, there were 892 illegal operators working in the US in the first half of 2024. In addition, 651 affiliates were promoting illegal platforms in the US as well. And now to give you some additional numbers, as we will catch this one up within our story about one of the operators leaving the US, as ESPN and Fanatics report a slow monthly revenue results in New Jersey. According to the data provided by the state's Division of Gaming Enforcement, sports betting operators generated 80 million in gross revenue in July 2024, which represents an increase of 31.2 compared to the same month last year. And now it's getting interesting. The Flutter-owned brand emerged as the top operator in the state for online revenue in July 2024, clocking in at 31.9 million. And they increased it last year in July from 24 million. I'm speaking about FanDuel. While DraftKings, DraftKings finished second with online revenue reaching 25.9 million just in July. In total, just these two represent 57.8 million, which represents a market share of 72.25%. If you ask yourself, what about ESPN Bet and Fanatics? So ESPN Bet comes in with 2.4 million, while Fanatics is closing in slightly ahead with 2.7 million. Or in market share, both of them clock in at 3%. As said, Fanatics and FanDuel are leading the market on a monthly by monthly basis and state by state. That's why other operators actually, ditch out of the market. Then GIG reports a 39% revenue increase for Q2 2024. Gaming Innovation Group, GIG, has reported its financial results for the second quarter of 2024, showing a 39% year-on-year increase in revenue. The revenues reached 30.3 million, driven by an 18% organic growth. Even the EBITDA rose by 43% and clocking in at 14.8 million. Then heading over to regulation, as KSA shut down influencer video on YouTube. So the Netherlands Gambling Authority has taken down a YouTube video in relation to its alleged inclusion of an illegal gambling advertisement. In their initial attempt of two YouTubers to become compliant, the influencers blurred out the image of the gambling sites promotion in the video. However, the audio where they positively discussed the website in question was still there. So even the dumbest could guess what kind of operator they were promoting. Now, Bet at Home faces a 2.8 million payout in Austrian player losses case. Austrian Supreme Court has ordered BetClick Everest subsidiary Bet at Home to pay 2.8 million in player losses nearly 3 years after it withdrew from the market in Austria. The case related to a player that was deemed in gambling addict by the court and incurred significant losses on Bet at Home's side between, and now listen, August 2018 and July 2020. So we're speaking about a time span of 24 months. Was losing 2.8 million, which is roughly 120,000 euros on a monthly basis. I don't know about your salary, but I couldn't afford 120,000 in deposits on a gambling website. But people are different. 2 more to go. As Tabcorp fined 4.6 million Australian dollars, which is roughly 2.7 million euros, for staff failures in Victoria. Infringement saw Tabcorp staff promote direct marketing material to a customer who had opted out of receiving promotional offers. Furthermore, staff failed to provide appropriate support to a customer exhibiting observable signs of distress or indicators of potential gambling harm. Like the Kansspelautoriteit in the Netherlands, even in Australia, they don't hold back. And last but not least, and this is quite interesting, as Ecuador sees 65 firms submit interest in a 15% tax betting market. Ecuador's Internal Revenue Service has confirmed that a total of 65 sports betting companies consists of 63 regional and 2 foreign sports betting companies have agreed to pay the national of 15% tax to offer sports betting officially in Ecuador. As it stands, there is currently no explicit ban on online gaming, which has created a gray area in that sector. And now it gets interesting. As Ecuador's serving president, Daniel Noboa, tried to address this at the start of this year by submitting 11 questions to the Constitutional Court as part of the new national referendum. Unfortunately, the 20-day deadline that the court was given to produce the answer was cut short after drug kingpin Adolfo Fito Macias escaped from prison on January 7, and with that drove Ecuador into a civil war between authorities and drug cartels. That has been my 10 and 5.
Wow. Complicated situation in Ecuador at the moment, Nico. We'll be following up on that one just as soon as we get some more information. But there you go. There's our first 10 stories of the day. And guess what? There's still 4 more to come. So headline lovers, don't you worry. We've got plenty to keep you occupied today. First and foremost, Nico, we had a new deal announced just last night by DraftKings. You've already mentioned them a couple of times. They're getting a lot of shout outs today. So, as many of you may have heard, DraftKings is going to acquire Simplebet, the micro betting supplier. So many of you will know about Simplebet. And Joey Levy and Chris Bevilacqua, who are the guys behind this business. They are partnered with the Jake Paul backed operator Better, which is very micro betting focused. They're particularly active in the US, where, you know, I think here in Europe, with the particular sports preferences we have, Nico, compared to things like basketball, American football, baseball, it gets spoken about a lot that actually speed and the cadence of these US sports is much better suited to micro betting than, let's say, you want to put a bet on the final result. Well, guess what? If you do that on a baseball match, you've got to wait 4 hours then to find out whether you've won. Whereas micro betting, a bit more fast paced. And it's certainly something which is gaining popularity across the US. So just to give you a bit of context on this deal, DraftKings and Simplebet had an existing agreement in place since 2021. When they agreed a multi-year agreement for Simplebet to supply DraftKings with micro betting products for leagues like the NFL, MLB, and NBA. As part of that agreement, 3 years ago, DraftKings acquired a 15% stake in Simplebet. But now we've had it announced that DraftKings is going to buy the rest of the equity in the business, and the offer to buy the remaining 85% shares in Simplebet has been approved by the boards of directors of both companies. So it's nearly cut and shut and ready to go. There's just a couple of regulatory approvals and customary closing conditions to work out. We had a press release from DraftKings about this, but it was not. It didn't include the details or the terms of the transaction. But luckily for us, we did get a note from JMP Securities, who sent out an analyst note to analysts and investors, suggesting that the deal could be worth up to $195 million in total. So pretty big acquisition, actually. So that's, according to JMP, that's going to consist of something like $70 million up front, and then potential earn-out payments worth up to an additional $125 million. So, Nico, for a business that was founded, I think, in 2018, 2019, now they're looking at up to $200 million nearly in value there. Pretty impressive stuff from Simplebet. Just to explain a little bit, we've already touched on this, but what the idea is for DraftKings. So DraftKings said that after the transaction, it will integrate Simplebet's proprietary machine learning models into its pricing and technology platform, quote, to create highly accurate betting opportunities during every moment of a game. So again, it goes back to that customer engagement, Gen Z, trying to engage the young people with some fast-paced action. In my mind, it's almost a kind of casinofication of sports betting, because it's like, yes, no, place your bet very quickly. It's like spins on a slot machine or spins on a roulette machine, almost. Anyway, DraftKings said that it would improve the quality, breadth, and speed of data throughout the DraftKings trading life cycle and unlock a faster and more frictionless experience for its customers. Chief Product Officer Corey Gottlieb said that live betting represents an area for potential growth for online sports betting, and the acquisition would allow DraftKings to create an in-play wagering experience that moves at the speed of sports. So that's the idea. If you think about something like NBA basketball, it's incredibly fast-paced and fast-moving. So they're trying to bring the betting experience up to speed with that same pace. So, in my mind, Nico, it's if the tech is right and it's sort of straightforward enough for DraftKings to implement without incurring a huge amount of additional costs, I think one of the big benefits of a deal like this is that it's part of a broader push towards profitability. Things like micro betting, just like same game parlays, I believe have the potential to generate a much better hold rate for the operator. So compared to traditional bets, they may find the margins are a little bit healthier. And again, as I said before, it's part, I guess, of a broader push to simplify sports betting as well a little bit, introduce new people into the ecosystem. If you can answer a simple yes or no question, it's much easier than searching through sheets and sheets of different matchups and things. And one of the things I'm wondering about now is exactly what's going to happen with Simplebet's existing customers. Of course, you don't get to $200 million valuation without having a number of clients on board. And we mentioned Better before, but I believe Simplebet has a roster of clients that they're providing micro betting services to. We don't know whether DraftKings eventually is gonna get exclusivity over this technology, or whether the clients will continue to, benefit from those agreements. So that's something we'll be following up on. But so far, Nico, sounds like a pretty big deal. DraftKings obviously not shy about continuing with a M&A. So there you go. What do you make of this one?
Yeah, so first of all, the overall pricing of 195, with 70 million upfront cash and an earnout payments of valuing 125 million. So this is always a best case scenario, right? Just remember last week's episode when we've been shortly speaking about Better Collective and their acquisition of Playmaker, where they didn't hit the numbers of the earnout model. So that's why the price has been lowered. Yeah. So as said, with the 125 on the line, this is just the best case scenario if they hit all the KPIs, which is still a significant amount. But just keep that in mind that, 70 million, which represents like 39% of the overall sum of 195, is guaranteed. Anything else is just based on an earnout payment. So the price can go down, and we will just see. That's how you actually lower the risk of the buying company. And as you already mentioned, the overall micro betting, especially with the US-based sports like American football or Major League Baseball, where you're straight to the actual, like, okay, what's going to happen within that specific run in NFL? Will it be a run? Will it be a pass? Will it be an interception? Whatever. So that's what micro betting is pretty much about. And this is just based on the US-based sports. Are they stop and go sports? Not like the European type of sports where you just have one football match, which lasts 45 minutes each half, and a lot of so it's not stopped in between. But as said, it's an American company, and I'm pretty sure they are just diversifying their portfolio, and it just makes sense. As of now, DraftKings is just investing into US-based companies. Maybe we will also see a move outside of the US. Maybe they are getting into Brazil as well. As of now, we did not yet see any move, and DraftKings are on the news at least with 2 topics every week, with the NFT and now being sued by the NFL Player Association, etc. So it doesn't get quiet with DraftKings, and it never gets quiet with the market leaders. As the higher the rise, the sharper the knives. This is something which I quote so often. And as said, for sure, it will never get boring, but they are investing wisely, as you said, with the top-notch tech and preparing for the Gen Z. It's the upcoming generation. And as said, micro betting might be the make it or break it factor just to attract more and more revenues of the Gen Z.
Yeah, couldn't have put it better. It's not me. It's not for me personally, Nico. I like correct score. I like having a bet on 2-0, 3-1, that kind of thing. Get some nice long odds. I never win, but that's fine. That's not what it's about anyway, is it? The micro betting, because I on my bookie, I do see there are some micro markets, but it's like, what's going to happen in the next minute? For me, that's too fast paced, to be honest. I want to enjoy the anticipation and enjoy the duration of the match. Anyway, everyone has their own preferences, and what it does do, as I said, is to really simplify the betting experience. And I think that was a big part of the motivation behind the launch of Better, which was all about, can we get this YouTube generation of kids to come on, not kids, can we get this YouTube generation of over 21-year-old adults, obviously, to get into sports betting if they hadn't been into it before? I say kids because I'm an old man now. I say in a general sense, not actual kids. Anyway, that's enough of that.
So these fast-paced markets are forbidden in Germany.
Yeah.
Right. So as you said, it's not related to any kind of skill game or whatever. It's pure luck. It's pure luck. What's happening next? And next is a time span of 5 to 10 seconds. So unless you're Marty McFly, you have no clue what's going to happen within a time span of 5 to 10 seconds. Right. So that's just my take on this one.
There you go. Yeah, fire up the DeLorean. Nico will travel to the future and get next week's Euro Millions numbers. Anyway, we've got another M&A story for you. Our second M&A story of the day. It's been a hot week for acquisitions, although actually this story came out last Friday, so we didn't get to mention it in last week's episode. But that's why we're bringing it back to you today, and it's all about Evoke or 888, as you may know them. Nico, I know you've been looking into this one. What have you got for us?
So Evoke PLC is set to become the fourth largest B2C operator in Romania by acquiring a majority stake in the owner of local brand Winner.ro, a company called New Gambling Solutions. So Evoke will receive a 51% stake in the company, which is the seventh largest operator in the country, for 10 million cash injection. So there's no earnout model as of now. It's 10 million cash up front. So Evoke's existing 888 RO brand will then be brought under the with the new acquisition to create a combined entity with a 7% Romanian market share, and which would put him to the fourth largest nationwide. Evoke CEO Per Widerström said, "This acquisition is consistent with our strategy to build sustainable market-leading profitable position in the most attractive markets. It is also consistent with our M&A strategy to focus on low capital, high impact combination that accelerate the delivery of our strategy." Widerström added the acquisition meant Romania would be considered the group's fifth core market, and argued the transaction would deliver significant value. For background, Evoke announced a strategic reset in March, which involved the division of all its operations into core markets. These core markets are UK, Italy, Spain, and Denmark, with other active jurisdiction considered optimized markets. So Romania will join this exclusive club of the Fantastic Four. The company plans to operate a multi-brand strategy in Romania, aiming to leverage a local hero brand alongside its complementary 888 casino brand. Evoke will own between 51 and 57% of the business by 2026, depending on its performance. So there the earnout model comes into play. It will also have the option to unilaterally increase its ownership to 100% from the third anniversary of completion. And if you're into numbers, Winner.ro itself was launched in 2019 and delivered 19 million, so 19, in GGR for the first half of 2024. So if you are into numbers a little bit and M&A as well, especially, it just smells a little bit strange, to be honest, as, you know, H1, H2, 19 million in H1, you double it, you have probably the full, it's roughly 40 million, and they are buying half of the business for 10 million, which is usually you have a multiplier, which is in between 3 to 5 times the GGR, which is the market capitalization. And this multiplier is usually in the positives and not 0.5, Just as an example, Evolution has a market capitalization of 221 billion Swedish krona, while their revenue is roughly 22 billion yearly. So they have a multiplier of 10 times. So why is a Romanian and established company going for half of their yearly GGR? We don't know. We don't know. But for sure, there will be news coming or flying in within the next time. As said, usually you have a positive multiplier 3 to 5, depending on the business itself. But you don't have a multiplier 0.5. So that's just my take on this overall story. What do you make out of this, Connor?
Yeah, it's not immediately clear why the multiplier is so small, in fact, less than 1. The only thing I will say in terms of comparing it to someone like Evolution also has an EBITDA margin in the region of 70% most quarters. So, an incredibly profitable business. I think any B2C operator would be over the moon if they could generate profits just like Evolution does. So it's not exactly clear because obviously Winner.ro is not publicly listed. We don't have access to their accounts and to their results, so we're not sure exactly what's going on. I don't think it was specified that this was done on a cash-free, debt-free basis, so maybe there are some debts involved. Maybe the brand's not profitable and losing significant money every quarter. We don't actually know the details of that. The only thing I will say is that Evoke said the transaction is expected to enhance earnings and reduce leverage for the group in 2025. So it's not expected to impact Evoke's financial leverage this year. And obviously, when you talk about figures like 10 million euros, that's quite small compared to the level of debt that Evoke particularly has. Obviously, they spent £2 billion a couple of years ago for William Hill's non-US assets, and then it all kind of they probably bought it at the worst possible time in history. So they've been struggling with that debt and that leverage. But they said this is not going to impact it. So I'm assuming they're not taking on tons of debt to finance this, or they're not taking on a huge amount of Winner.ro's debt. But maybe there's something in the numbers that we haven't been told yet. And I think the likeliest place we'll get that eventually, after the deal completes, we'll probably get some more colour on this in Evoke's future financial reports. So it's another one we'll be keeping our eye on. Well, the stories are coming thick and fast today, Nico. We're 12 down, 2 more to go. But before we move on to our third main story of the week, I believe we have just a brief video message to share with our viewers.
Games, hundreds of studios, dozens of Hub Market partners, an industry-leading Hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
There you have it, Nico, and thank you once again to Hub 88 for sponsoring this episode. Now, we are moving straight on to our third main story of the week, which is a bit of a quick one. Just a little note from BlueBet, the Australian operator. We heard a little bit about them a couple of months ago. Kind of a small, not a huge operation, not exactly a household name globally, but certainly has a reasonable presence in Australia. But the news we've had today from BlueBet is that they are going to exit the US market to refocus on expanding their Australian operations. So, just to fill you in a bit on the background, what they have live in the US at the moment is actually a SaaS platform, software as a solution platform, which they're offering to B2C operators. So BlueBet's got a B2C operation in Australia, and it had this B2B operation in the US. But today it announced it would withdraw from America, which was driven by slower regulatory progress than anticipated, which BlueBet said has stunted the overall market growth and reduced interest in its B2B SaaS platform, which was previously thought of as a significant growth prospect. They thought, well, if we can start getting into America, servicing all that long tail of operators there with our B2B solution, then who knows, the sky is the limit. Unfortunately, as we know what the market's like in the US right now, well, BlueBet put it better than I could. They said in a press release, the industry dynamics in the US B2C market are such that scale players, DraftKings and FanDuel, are currently dominant, with smaller operators unable to achieve the necessary unit economics, driving a recent wave of consolidation and exits, which is likely to continue into financial year 2025. So DraftKings and FanDuel are eating everybody's lunch and everyone else is skinned. Therefore, we're leaving. Okay, fair enough. What's it going to do with that? Well, once its US operations are closed, BlueBet anticipates reallocating the related $6 to $8 million in annual cost savings to boost its Australian operations. It said it holds a sustainable competitive advantage in Australia, obviously, in contrast to the incredibly competitive US market. So BlueBet is aiming now to exceed a 10% market share in Australia in the short to medium term through a combination of organic growth and strategic acquisitions. Talking of strategic acquisitions and mergers and all that stuff, you may remember, Nico, earlier this year, back in April, I think, BlueBet entered into a binding asset sale agreement with Matthew Tripp's Australian brand Better. We've already mentioned Better, the Jake Paul US company today. Now, just to confuse things, we're mentioning Matthew Tripp's Australian Better, totally different companies. Anyway, so in August, which is this month, it is still August. So just this month, BlueBet started rebranding its Australian B2C operations under the Better name, BETR. To reflect the integration of the two companies. So, bit of strategy here, Nico, bit of big picture thinking. Obviously, after the merger, these two brands have got high hopes. I think when that merger was first announced, it was kind of built on the fact that BlueBet had this technology platform and Better had this kind of marketing reach, and it has made quite a splash and quite a lot of noise in quite a short space of time in Australia, so it was becoming quite popular. And anyway, they're bringing together two customer databases. They're uniting under a single brand and a single tech solution, which will obviously bring a lot of cost synergies. And now the company's saying, well, we want to really give it everything we've got in Australia. So they're going to save a few $1 million a year from the US and put it back into the core business in the home market. Makes sense to me, Nico. I think it's not surprising to see more people pulling out of the US. This is, usually we're seeing and talking about B2C operators over there deciding they've had enough, but this time we've got a B2B supplier as well, says, you know what, not for us. So what do you make of this one?
So first of all, they are just, actually joining an exclusive club. Also with Betway, they announced their shutdown of their US business will cost them around $50 million, which they announced by the second week, 8th of August. Then besides this one, and as already mentioned, New Jersey, FanDuel and DraftKings are leading with like 72% of the overall market share. So you need to invest heavily. So the US, although it's the holy grail of the sports betting markets, it doesn't come cheap. And that's why either you invest heavily, also like the BetMGMs, the Caesars, it doesn't come cheap. And if you are willing to actually, diversify your portfolio, and nobody pushes you to actually, get hold of the US, maybe you can just spend the money more wisely in your home market like they did in Australia. And always remember that the leading companies, and we're speaking just about a duopoly of DraftKings and FanDuel, they own their own tech. So it's not like they are specifically looking for something to actually join a B2B cooperation or relationship, as you already mentioned. DraftKings, if they're interested in some specific tech, they just buy the whole company. So they don't sign any kind of, business relationship. They're like, okay, so we've sent over a check. So just fill in the numbers which you're comfortable with, hand over the source code, and just enjoy life wherever life will take you. That's the DraftKings approach. And that's why it's so hard to actually get hold of the US as well. That's just my take.
Yeah, I couldn't agree more. Exactly. So there you go. We'll be keeping an eye on better. Obviously, Australia, quite a limited market in lots of ways. No iGaming down there, but we do have a huge sports betting market, and some of the biggest spenders. I think the biggest spenders per capita globally on gambling. So obviously an attractive market for lots of betting operators. I think pretty probably not a totally different dynamic to what we see in the US. I still think it's a handful of companies in Australia that have the vast majority of the market share. But I think when you have that cultural understanding and it's your home market, I do think that's an advantage compared to trying to go right the way across the world and sell your wares somewhere where you're perhaps not as well known. So we'll see what happens. BlueBet publicly listed, so we will be able to see the results of this reinvestment in the coming quarters. So there you go. Now, to round off, Nico, we got one more story to look at. This might be another one where maybe the numbers seem to look a little bit strange. And this is our story from Georgia this week. Nico, you've been looking into this one as well. Why don't you give us the lowdown on Stripe in Georgia?
Yeah, and that's also quite interesting. So first of all, if you want to read through that article, just feel free to actually scan the QR code, which you can see on your top left corner. And also based on what you've just said with the Australian brand Better, BETR, and the US-facing brand, where it's also the same name, probably we're seeing the same in Georgia as well, as a Georgian court of the first instance rules against Stripe and Flutter Entertainment-owned brand Adjarabet last week on Tuesday in a $330 million copyright infringement case. The court found copyright and trademark infringement, as well as invalidated trademark registrations based on a bad faith registrations, awarding claimant Aviator LLC $330 million in compensation for past use. So to give you a little bit of a background, Aviator LLC owns several trademark registrations for the graphic logo Aviator for gambling services, including online and physical casino services and gambling. So they are owning the trademark. The image and brand name Aviator has been used by Stripe and its flagship game, which was offered by the online gambling platform Adjarabet in Georgia. In 2021-2022, Stripe registered its own Aviator trademarks for computer games and gambling services, which the claimant, the original owner, argued were infringing on their original trademark. So that's what's going on, or that's what has been decided on. So we, Next.io, understands the lawsuit relates to an ongoing dispute with the previous shareholder of the Adjarabet business. A source also said Flutter disputes the basis and quantum of the decision and intends to appeal. Of course, they want to appeal. It's about $330 million. Aviator LLC owns several. The image and brand name Aviator has reportedly been used by the iGaming developer Stripe in its flagship Crash game since 2019. Aviator LLC then filed a lawsuit against Stripe, claiming the trademarks were registered in bad faith and that they infringement on its copyright. So we understand that the game generated approximately 7.5 million in revenue for Adjarabet in Georgia since or during 2023. And another source described the level of damages are egregious and bearing no relation as to the actual economics of the property. To just give you even further insights, some companies specialize in actually claiming a local trademark of existing companies. That's why, especially in the US, as soon as it came to in-play betting, it wasn't who actually owns the tech. So whoever just claimed the first IP, intellectual property, and handed in this claim to local authorities was the owner of this live betting, etc. This is what some of the companies actually did. So as soon as another company just wanted to use or live betting, live betting, then you always needed to pay something to the owner of this IP. As said, there are companies actually specializing just on getting hold on the local or national IP of an existing brand, which was quite interesting in Georgia, as the Aviator trademark has been used by Stripe, although it was an offered game by Aviator LLC. And one thing is for sure, 330 million on the line. They will appeal. So this will not be the last statement and the last news about this specific topic. But Georgia, one of the biggest markets all over the world. No, just kidding. So as already mentioned, it's generating approximately 7.5 million and then, claiming 330 million in damages. It just sounds like, people suing other people in the US for whatever reason. So it's a cash gaining game. That's my take on this one. What do you think out of this, Connor?
Yeah, that's why I said that the numbers in this seem especially odd. Even if we're looking back to 2019, let's say 4 years of use, if it generated 7.5 million in revenue every year for those 4 years, then we're talking about $30 million. And now all of a sudden the claim is for 330. So you want to talk about multiples? That's an 11 times multiple. Just for anyway. I mean, I guess there's all sorts of things that you would do as the plaintiff in a case like this to inflate the value, the perceived lost value by someone infringing on your trademark. So maybe that's why they've multiplied the numbers by 10 or whatever. But certainly, this was the court of the first instance, as they call it in Georgia, which means that's the first ruling. There will be, as we see everywhere, Nico, levels and levels and levels of courts of appeals where you can take this higher and higher, baby. And you never know where it will end. Maybe with the Supreme Court of Georgia, but we'll see. We'll certainly be thinking about this one as we hear more. And let's say hello to Augusto in the comments. Hello, and thank you for your messages. Nico, I think that's pretty much it for this week. We will definitely be talking about LATAM and Brazil in the future, one of the most interesting and exciting regions globally for iGaming right now. Certainly, a bit more appealing than somewhere like where you might get sued $300 million just for making $7 million, because that's a bit odd. But I wish I knew more, Nico. We don't always get the inside scoop on absolutely everything. My sources inside the Georgian court system are pretty limited, unfortunately. But
Yeah,
exactly. If anybody out there is working in the court of first instance in Georgia, feel free to reach out and you can help us understand a bit better what's going on there. But because it's such a big number, I think it was important we brought that to the viewers this week, Nico. We are nearly an hour into the show, so I think it's time to go to the wardrobe, dust off those lederhosen, and get ready to get back to the beer garden this evening. How does that sound?
Wait. Just because, funny enough, of course, there are the lederhosen. There are the lederhosen, right? So the Oktoberfest just around the corner. Of course, I got my lederhosen up and ready. So just after SBC, you will just see me lederhosen wearing like 24/7. Okay, so cutting a long story short, of course, I got the lederhosen. And just to getting back to Augusto Tossin, first of all, thanks for joining our show as well. As you already pointed out, Brazil is one of the most, anticipated markets, and we usually have at least one topic on a monthly basis. Today, we just touched on Ecuador, which is, South America, of course. But be assured, we will always be able to actually give some hints and insights on the Brazilian market as well.
Absolutely right, Nico. Okay, we've taken up enough of these nice people's time. I think we should sign off by saying that, of course, we will be back here at the same time in the same place next week. Let me say thank you once again to Place and Hub88 for sponsoring this episode. Thanks to everyone for watching. And Nico Jansen, last but not least, thank you very much to you. I'll see you back here maybe next week, maybe in a couple of weeks. We'll see.
Thank you for having me, and to each and everybody, have a lovely weekend and just enjoy sunshine.
Thanks, Nico. Bye, everyone.